how to get into the best medical equipment financing programs possible. Right? So if you stay to the end and comment guide, I am going to give you a cheat sheet on everything you need to know about getting the best equipment financing possible. All right, and subscribe to the channel because I always have relevant information about SBA loans, lines of credit, anything and everything you need to know to grow your business. All right, so if you're looking to purchase equipment for your medical practice, whether you're a dentist, just if you're in cosmetology, any type of cosmetics, anything like that, the best thing you can do is get into the right equipment financing program. So here's how you get the best terms. First off, you need to know what's needed. You need to know what underwriters are looking at. You need to understand what that piece of equipment is going to do for your business. And then you have to know where to go. We're going to cover absolutely all of that. Now, most equipment financing will be around a 5-year term, okay? And you don't want to go to a local bank because not every local bank has what you need. They might just give you a loan. And the most important thing you can do is set your business up for success by building comparable debt on your business credit. And that is done through equipment financing. So let's talk about what you need just to get started. First off, all you're going to need is you're going to need a quick application. You're going to need the invoice for the piece of equipment you're trying to purchase. All right, 6 months banks and a tax return, and maybe a couple other things, but nothing crazy. This whole process can get done in about a day or two. All right. Now you have to understand what they're looking at. They're going to be looking at your credit. All right. So when they're looking at your credit, they're looking at your personal credit and your business credit. You ideally want your personal credit to be over 650, and you want to have some established business credit. If you don't, that's okay. We can help you with that, right? On this channel, right, you're going to be able to find how to build your business credit. Search for that, and that'll really help. Next, they're going to be looking at your time in business. All right, startups are a lot harder to finance than a traditional a business that's been around for a year or two. All right, if you're a startup, you need 700 credit and you need to show that you own a home. If not, there's other financing programs available like a term loan. All right, now, after they look at your credit, both business and personal, they're gonna look at your time in business, they're gonna look at your cash flow. All right, how much, what are the deposits, how much cash do you keep in the bank, what's your total sales, and they're going to look at your profitability if the piece of equipment is, let's say, over 150 or over 200,000. All right, and as long as you show that you're profitable and you can service the payments, you should be fine. If it's under 150, a lot of times you can do it with just an application and that invoice. All right, so that's really simple. That's key, right? To know what they're looking at, what underwriters are looking at, what some of the banks are looking at. Next, why should you finance it? Right? Well, in your case, in the entrepreneur's case, how much business is that piece of equipment going to bring in to your practice? All right, that's a big thing that we want to explain during the underwriting process, because if an underwriter can see, hey, it's going to make you an extra $20,000 a month, an extra $10,000 a month, that's an easy thing for them to sign off, right? Also, why should you finance it? Well, you want to conserve your cash in these times. All right, the more you conserve your cash, all right, the stronger the practice is going to be. Also, you can write off all the interest in that piece of equipment. So if you're paying, let's say 8% or you're paying 7% interest, each payment that you have, you could write some of that off. Or you could be really creative and do a lease with a dollar buyout at the end. So you can basically write down or write off the payment every single month and then buy it for $1 at the end. Also, when you buy a piece of equipment, you can depreciate that. So that's why you want to finance it, and that's why you want to work and understand the options, because depending on how you want to claim or do your taxes at the end of the year, that matters how you're going to finance this piece of equipment now. All right, so I just want to give you a little bit of background on myself and my company. I founded Integrated Business Financing. I've been in small business lending for 14 years. And I've helped thousands of businesses get close to $1 billion in growth capital. All right, now what are the next steps? If you're ready to move forward, write apply in the comments or reach out to us directly and we can help you get this wrapped up and we'll make sure you get into the best terms. If you just want our guide, comment guide and we will send you the essential tips on getting into the best equipment financing programs possible, and make sure you subscribe to this channel. Thank you.